If you want to know why Bitcoin is about to explode and how corporations worldwide are about to pump your bags, you're in the right place. It's time to literally wake up. Wake up, everyone. Everything I've been talking about for months is now about to pop off. Hundreds of billions are about to pour in. So I'm here to get you guys prepared. I just did all of the painstaking research. This show is absolutely jam-packed with details. This is one of those shows that you do not want to miss or stop paying attention to for 1 second, because everything is critically important and there is a ton of data packed into this show. So pay attention, and if you care about your friends, your family, your siblings, this is something that you want to share with them as well. This is designed inherently to give you guys a rude awakening on the crisis that we're in with Bitcoin right now. And if you only look at the price, you're missing the forest through the trees. This is something I couldn't have dreamed of in a million years. We're talking about how corporations are literally hoovering up vacuum, and this is only accelerating at a pace that is unimaginable. So without further ado, guys, let's get into it. One Japanese company just parked $1.7 billion in Bitcoin on its balance sheet, and they're not stopping. And what do they plan on doing with all this Bitcoin? Well, something different. They're borrowing against that war chest right now to snap up profitable businesses. This is Bitcoin Treasury 2.0. Metaplanet is targeting 210,000 Bitcoin by 2027, more than 13 times what they currently hold today. But they're not alone. Across Wall Street, Hong Kong, and beyond, treasuries and institutions are piling into Bitcoin, Ethereum, and Solana. Trump's brand new crypto ETF is launching with a 70% Bitcoin allocation. Trump's new ETF. Yes, President Donald Trump. Let that sink in for a second. Now, there's gonna be a lot that we talk about today, and I'm gonna pause sometimes for the ones that I think really need to seep in because there's so much data in today's show. Solana has just exploded past $400 million in real-world assets in just 3 months. Central banks are smelling trouble and have been buying gold for 24 months straight. Meanwhile, the US national debt just crossed 36 trillion. Now I'm gonna come back to that in a second, but pay attention. The dollar is down over 10% this year, and copper prices surged 20% in a single day. The foundation under the old financial system is shifting in real time. But here's a twist almost nobody is seeing yet. While the headlines chase ETF launches and market rallies, the real race is happening in boardrooms where the balance sheets are turning into the ultimate weapon for the next phase of Bitcoin adoption. If you want to know what happens when the biggest players in the world turn Bitcoin into their core treasury engine, you're in the right place. Stick with me, guys, because what comes next will decide who wins the next decade. Let's break down exactly how this Bitcoin Treasury 2.0 is flipping the script, why the new flood of capital is just getting started, and what it all means for you and how you guys can profit from it right now. Of course, none of this is financial advice. It's just data. It's just facts, right? This whole show is just facts. And we'll summarize it at the end. And you guys want to stay tuned for that too, because I'm going to put it all in context for you as well. Let's start with the US national debt. Now, earlier, remember I said $36 trillion, but the actual number is $36.58 trillion. Now, it's easy to get lost in these numbers because they're so insanely massive. We all know how large a billion is, right? It's 1,000 million. And to become a millionaire is a lot of work. It's hard. Becoming a multimillionaire is also very hard. To become a billionaire is something that is just dreamed about by any entrepreneur. So $1,000 billion is 1 trillion. And now the US is in $36.58 trillion of debt. I say that because earlier I said $36 trillion. And it's easy to brush that off and say 36 versus 36.58 trillion. No, but that's $580 billion. And in rounding error, this is how insanely astronomical the US debt is growing. Why does that matter? Well, we're about to cover that. But to give you some context, this is all new money coming in circulation. And historically, new money coming in circulation is very good for our industry, for crypto, for Bitcoin, for altcoins, And that will become more abundantly clear as we get into this video. The pace of debt accumulation has gone absolutely parabolic since 2008, and especially since 2020, accelerating in the past year. National debt is forecast to rise another 10 trillion just under the Trump administration alone. Think about that. That's over $3 trillion. That's 3,000 billion over the next 3 years or so. This makes the COVID stimulus look like a bump in the road. And we know how the COVID stimulus pumped our bags to absolute Valhalla. This is just the beginning, guys. We're about to get more into it here. The US dollar index has seen a rare collapse, dropping 10.1% since January. It's the worst to date performance since 1973. The index now trades 6.5 points below its 200-day moving average, which is the widest negative gap in over 2 decades. To put that in perspective, that's like watching your favorite team go from winning the league to suddenly falling into last place, all in just a few months. It's a wake-up call for anyone who still thinks that cash is king. This is why I'm out of cash completely. You guys know that who've been watching the channel completely. As of like a month ago, took the rest of the dry powder, put it in Ethereum, put it in Aave, a little bit in Link. Yeah, the last of the dry powder, gone. The last of the cash, gone. Short positions by asset managers and leverage funds at the lowest levels since mid-2021. According to JP Morgan, this level of bearishness hasn't been seen in 3 years. Markets are shifting fast. The Goldman Sachs Financial Conditions Index, which tracks how easy or tight it is to get money flowing through the economy, just hit its lowest level since 2022. A weaker dollar and hopes for rate cuts are loosening things up, and investors are already betting on lower interest rates ahead. Recession probabilities have dropped dramatically. The odds of a US recession in 2025 have fallen to just 19%. Earlier this year, they were at 40%. That's a big relief for risk assets, and one of the reasons money is flowing back into the market. Central banks are on a buying streak. Net gold purchases reached 20 tons in May. In the past 12 months, central banks have averaged 27 tons of gold purchases per month. A World Gold Council survey of 73 central banks show that 95% expect their gold reserves to increase over the next 12 months. That's probably got you thinking, what do they know that we don't? Well, you guys who watch the channel understand this, and Bitcoin is digital gold. And in my opinion, and in a lot of people's opinion who aren't dinosaurs, understand that Bitcoin is a better form of gold. It's more scarce, it's easy divisible, it's non-confiscatable, it's transferable, you can go cross borders with it. It's just better. Explosive US debt, a collapsing dollar, easier financial conditions, fading recession risks, and global central banks stacking gold for 2 years straight. The world's major players are in full rotation toward hard assets and sound reserves, while digital assets are quickly gaining ground. There's a lot of reasons here to be extremely bullish, but the biggest is, in my opinion, the dollar to US dollar trading pair. Anything right now priced in dollars is likely to go up in value. Even real estate, even though we're probably, at least in America, in a bit of a stagnant place for real estate, but it doesn't matter because when you price things compared to dollars and the dollar is weakening, the counterparty asset will appreciate. And that's another reason why it's not impossible that Bitcoin goes to $10 million sooner than later when you look at just how fast the dollar is being debased. Stablecoins are a saving grace for the US dollar. They will help keep the demand of dollars higher and US government debt because these stablecoin issuers are buying US treasuries. But at the same time, other global superpowers are trying to get away from the dollar. They're emptying their dollar reserves, and that is creating less demand for the dollar. And as we know, $10 trillion increase in debt is going to involve a lot of money printing. The big, beautiful bill, tons of money printing, $5 trillion over the next 2 years. So is the dollar going to collapse? Probably not, right? That's not easy. Like a lot of people are screaming the dollar is going to collapse, but will it be inflated or debased in perpetuity? Absolutely. And we're seeing that in real time. This 10% drop that we've seen recently shows you that. All right, guys, let me just show you something that's really, really interesting. Now, if you want to see why I'm so confident in Bitcoin versus US dollar continuing to increase in value over the next forever, right? Because we know the dollar is has no cap supply. We know it's been being debased for years and years and years and years and years since its existence, essentially. But check this out. So the dollar's worth the purchasing power, right? When your grandparents talk about being able to buy a Coca-Cola for a nickel, right? and now it's like $3 or whatever, right? But look at this. This is the dollar back in like the early 1900s. And now it's over here, right? So it's just nothing. And you want to look at the Bitcoin chart. This is the inverse chart of the Bitcoin to US dollar. This is what it was before, the US dollar, right? Compared to Bitcoin. And it's just falling off of a cliff. And it's going to continue to accelerate as well, right? So this is the power of a capped fixed supply where demand is increasing like we've never seen before at an incredibly accelerated rate. And you have this dollar that's about to be printed into oblivion. Now let's talk about what's shaking up global markets. President Trump has reignited the tariff machine, launching a 50% tariff on imported copper and threatening new levies on semiconductors and pharmaceuticals. The deadline for US trading partners is August 1st, 2025. This move targets countries like Japan, South Korea, and others. They're both scrambling for concessions, while the European Union warns it will retaliate if deals aren't fair. Trump's administration sent warning letters to 14 major trading partners. Yale Budget Lab now estimates the effective tariff rate on U.S. consumers has jumped to 17.6%, up from 15.8%. Treasury Secretary Scott Bessent says Washington has already collected around $100 billion in tariff revenue this year, aiming for $300 billion by the end of December. And to give you guys a little context, in the previous years, those of Biden and before, on average, we got about $80 billion in the year from tariffs. So likely up about a 4x or so from the Trump tariffs. So it's more money for the country, not nearly enough to cover the rising deficit, but it helps. And today we're expecting another 7 countries to be added to that list of the 14. We'll see today as that news comes out. Copper prices also surged as much as 20% after Trump's announcement of new duties, marking the sharpest one-day move for copper in the past decade. But copper isn't the only thing on the chopping block. Trump is threatening a 200% tariff on pharmaceutical imports, a 10% tariff on goods from countries in the BRICS groups, which we talked about, the other global superpowers, Brazil, Russia, India, China, South Africa, and others, and new tariffs on Japan and South Korea, and some as high as 40%. At this point, it feels like half the world just got a tariff notice. Wall Street's reaction was a quick sell-off on the headlines, but markets steadied once traders saw most of these threats are still in negotiation. Bitcoin, on the other hand, since we talked about it yesterday and how it wasn't even flinching, is up another 1,300 today. And even though it's been closely correlated to S&P before, what we're seeing in real time is what we're going to talk about in today's show is this corporate treasury demand, the ETF demand. Even with the news that affects the NASDAQ and S&P, you still see Bitcoin holding strong. And on top of this, Trump is applying political pressure to the Federal Reserve. What is new? He's calling for immediate rate cuts, which he has been doing, and claims tariffs have had zero impact on inflation. He's even urging Congress to investigate Jerome Powell. But before we start pointing fingers at Trump for higher prices at the store, let's look at the inflation data itself. Dr. Stephen Miran, economic advisor, reviewed the numbers on national TV. Since tariffs began in January, overall PCE goods prices have risen just 0.4%, while imported good prices have actually dropped 0.1%. According to the Council of Economic Advisors, there's no clear evidence tariffs are driving price increases. Watch this video by Dr. Miran as he breaks it all down.
Okay, maybe now, but they're going up any time now, Stephen. One of these CPI or PPI prints is going to be frightening because of tariffs. No, we've been waiting and waiting, and you're telling me that prices have actually been declining.
Good morning. Thanks for having me. Yeah, so what we did was we looked through the details of the PCE inflation data and CPI too, and then at every good in those data, we looked at its subcomponents. And so what parts are originating in the US, what parts are originating abroad. And so we're able to really get into a holistic measure of how much everything is imported. And what we found, and this paper's on our website now, you can find it on the CEA website, on the White House website. What we found is that since December, and you have to compare since December because tariffs began in January. Since December, the prices of overall goods in the PCE data have gone up by about 0.4%. Meanwhile, the price of imported goods, and that again includes all the components and the finished goods, the price of imported goods has gone down by 0.1% in this time. So not only is there no evidence that tariffs are leading to significant price pressures for imported goods, but we're actually finding the opposite in the inflation data. And this helps explain why overall inflation has actually been extremely tame since the president took office.
Goldman Sachs research now expects the Federal Reserve to begin cutting rates as early as September, pointing out that tariff impacts have been smaller than forecast and other disinflationary forces are stronger. Wage growth is moderating, job openings have started to fall, and the team now sees the odds of a September rate cut as somewhat above 50%. So not super convinced we're getting it in September yet, but we'll see. But this also aligns with the traditional 4-year cycle. Like if we follow the 4-year cycle, which I'm not convinced on yet, but if we do, which we always have before, September, October should be when things start to get really, really juicy. Goldman's new forecast calls for a series of 25 basis point cuts through 2025 and getting that interest rate down to about 3 to 3.25%. Across the board, the uncertainty around trade and policy is producing volatility and forcing institutions to rethink where to park their capital. The rules of the game are shifting fast, and that's why I bring you this news daily, as a reminder to get yourself prepared for what's happening. Every cycle has its signal, and right now the data is stacking up for a potential breakout. CoinGlass keeps tabs on 30 different bull market peak signals, everything from on-chain activity to technical models. Right now, all 30 are in hold mode. Not a single one is flashing a sell or warning sign. And if this bull market is still on, and it is, remember that the best parts always come near the end. Some models are projecting the next Bitcoin cycle to top anywhere from 135, boring, don't think so. And they think 230,000. I think it'll be $269,420. That's what I'm calling for now. For context though, the Mayer multiple, which is one of the biggest trend trackers, is sitting around 1.1 times the 200-day average, which is still considered neutral and nowhere near overbought. And if we go based on past cycles, the historical pattern suggests a possible peak window between September and October 25, about 518 to 546 days after the last halving. But again, that's only if we think that we're going to see the 4-year cycle. Like maybe for altcoins, right? Because by September, October, Bitcoin should be well over $125,000. I think at that point, retail comes rushing back. Every one of my friends is blowing me up and asking which altcoin they should be buying. Should they buy XRP or Dogecoin, whatever. But based on what we know, the fact that we've been in quantitative tightening till now, essentially, well, that's easing up. We're not full-blown quantitative easing yet. We haven't got rate cuts yet. And the big, beautiful bill was just signed and hasn't started printing money yet. And we're in July already, right? So all of this stuff still has to kick in. And then we have finally crypto being legal, estimated around September, which is going to ignite a whole new wave of everything. I don't see, we could potentially see an altcoin season that goes absolutely manic in Q4. And maybe that has a blow off top. And maybe Bitcoin does correct a little bit because it goes absolutely wild during that time and we correct a little bit. But as we continue to go through the show today and talk about this corporate treasury strategy and what's going on, you'll see why I'm having trouble coping with the fact that we see a Bitcoin blow off top in Q4 this year, and then we go into another 2-year bear market. Like, I'm having a really hard time struggling with that idea. And that's why I think that we're going to continue to see strong markets into 2026, and no longer will the traditional 4-year cycle to Bitcoin apply. Traders are getting more and more bullish as well. Rich Ross, one of Wall Street's top technical analysts, says Bitcoin is coiled like a spring or like a rattlesnake and could be ready to break out all the way to $170,000. And then think for a second where altcoins like ETH, Sol, and Sui will be if that happens. Much, much higher. Since November, Bitcoin's been stuck at a tight range around these prices right now. That's created huge pockets of leverage building on both sides, almost like a spring getting tighter and tighter. And when it finally breaks out, don't be surprised if we see these moves of like 5 to 10% in a day. Ethereum is even flashing its own breakout. Now, let me show you guys something. All right, guys, what we're looking at here is the Bitcoin dominance chart. We've talked about this many times before. It topped out at 66%. And for 1, 2, 3 weeks straight, Bitcoin dominance has been dropping off. And although it's still too early to say with certainty, it does seem like we're coming into a period of time, potentially when we start to see the beginning of altcoin season. Now, let me zoom out a little bit and just show you how wild this has actually been. Look, we've been in a Bitcoin dominance bull run ever since the beginning, ever since FTX. FTX happened here around November, bam. And then it's just been up and to the right for Bitcoin dominance. So being in Bitcoin would have been the best place to be. But we have seen Ethereum outperforming Bitcoin recently. And we've seen for the past 3 weeks, Bitcoin dominance starting to fall off. Could this be a signal that ETH is starting to gain traction? Well, we see it in the numbers. We see it. We're going to talk about it a little bit later in the show today, ETH Treasury strategies and how they're accelerating. But this could be an early signal. And again, it's still too early to see. We've seen also times when Bitcoin dominance dropped off and we thought it looked like altcoin season, but it's a really good sign. And this is what's going to really pump our bags like crazy. Solana, on the other hand, is picking up momentum. In just the last 3 months, the total value of tokenized real-world assets on Solana has surged 150% to a new all-time high of $418 million. User adoption is also accelerating, with more than 53,000 real-world asset holders, up 600% in only 30 days. I'm guessing this is largely due to X stocks, which we talked about recently on the show. And this is bringing like a whole new thing of stocks on chain, which is exactly where we talked about for over a year of where this market is heading. And I've also mentioned before in the past that there are some stocks I'd like to buy, but I don't want to get off. I don't want to go off chain. So now that we can actually do it on chain, it's very interesting. Institutional inflows are following. Solana ETF flows just added $21 million, reflecting the strong demand for the protocol. To put things in perspective, Ethereum, with all their ETFs combined, raked in under $30 million today. So imagine the numbers Solana will pull when the major ETF issuers step in. Technical indicators, on-chain metrics, and institutional flows are all pointing in the same direction. The setup for a major move is taking shape. And I'll be here making sure you guys are on the right side of it. All right, so guys, now let's talk about this Bitcoin Treasury 2.0 strategy, right? From Saylor's original method to what Metaplanet's doing. So this is the big story of today. And let's pull back the curtain on the next chapter of Bitcoin's corporate strategy. For the past 5 years, Michael Saylor's company Strategy set the standard. This approach was simple but powerful. Raise billions through borrowing and keep stacking Bitcoin on its corporate balance sheet. Right now, Strategy holds an eye-watering 597,325 Bitcoin, a $65 billion stash. That puts it at the 11th largest corporate treasury in the United States, right behind NVIDIA, the number one company in the world. Metaplanet, though, a Tokyo-based firm, is moving into what it calls phase 2 of the Bitcoin treasury approach. Instead of just buying and holding Bitcoin, Metaplanet now plans to borrow against its $1.7 billion in Bitcoin and use that collateral to acquire profitable, cash-flowing businesses. Simon Gerovich, the CEO of Metaplanet, says the company's goal is to reach 210,000 Bitcoin by the end of 2027, 13x from their current stash. What do I think of this strategy? Well, it's interesting, right? Because a lot of these Bitcoin and crypto treasury companies, all they're doing is buying, I've talked about this before, all they're doing is buying these cryptos and Bitcoin, putting on their balance sheets, selling more convertible bonds and borrowing money and buying more. And I don't think that's so interesting because as these ETFs evolve, as people can go buy spot Bitcoin, it's going to be harder for these treasury companies, especially as competition heats up, to keep attention, to keep their price going up. But what Metaplanet is doing is interesting. They're going out and buying profitable companies to increase their cash flow so they can acquire even more crypto. That's a pretty cool evolution. Across the industry, companies are experimenting with new ways to build and manage digital asset reserves, each using their own approach. SharpLink Gaming, for example, has disclosed 205,634 Ethereum on its books, valued at over 527 million as of early July. This gives them the second largest ETH treasury in the world, right behind the Ethereum Foundation. In just 1 week, SharpLink purchased over 7,600 ETH and plans to use new capital raised from stock sales to buy even more. The company has also earned over 320 ETH from staking rewards since starting its ETH-focused treasury strategy, setting a new benchmark for digital asset management and transparency in public markets. You can't do that with Bitcoin, right? They earned 320 ETH so far just by staking, right? They're getting real yield. GameSquare is making headlines in a different way. The company is launching a $100 million Ethereum treasury strategy aiming for on-chain yields of 8 to 14%. It's now the fourth company this month to announce a treasury plan focused exclusively on ETH, with Ethereum's market cap just 1/9 the size of Bitcoin's, and with native staking as an additive incentive. These moves signal that ETH is rapidly becoming a core treasury asset for public firms. Cooler, KULR Technology Group has secured a $20 million Bitcoin-backed credit loan from Coinbase Credit, giving them access to non-dilutive capital to keep accumulating Bitcoin. Reserve One is about to go public, raising over $1 billion to build a diversified crypto reserve with Bitcoin, Ethereum, and Solana on its balance sheet. There's another one called Ego Death Capital. They must be doing a lot of psychedelics. A venture firm has raised $100 million to support early-stage Bitcoin native companies like Roxcom, Rely, and Breeze, fueling the next wave of Bitcoin adoption and infrastructure. Solana is seeing its own treasury interest surge as well. The real-world asset flows and new ETF demand highlighting institutional demand beyond Bitcoin and Ethereum. The game has changed, guys. What started as a single strategy has become a global wave, flexible, creative, and multiplying every single month. And if you're still sleeping on these Bitcoin and altcoin treasury companies, here's the real alpha most people are missing and why they're so interesting. They're like the new altcoin season for Wall Street. They're called PCV stocks. They're public companies loading up their balance sheets with crypto. And they aren't just following the moves of ETH and Sol, they're multiplying them. For example, SBET, which is a bet on Ethereum, recently surged 80%, while ETH itself only moved 80%. That's 8x leverage just from the treasury narrative. Another one, UPXI, that's tied to Solana strategy, popped 77%, just 11% for Sol. That's a 7x. You can see why these treasury companies are all the rage right now on Wall Street. And they aren't one-offs either. This entire new class of PCV stocks is delivering moves that outpace the underlying coins by a long shot. If you want to track these plays yourself, I'll leave a link to a page that's tracking all of them in the description below. You'll find pure Solana strategies like UPXI, pure ETH like SBET, and 9-figure war chests chasing altcoins and on-chain stocks. These are high-octane moves that could easily outrun the coins themselves. I'm tracking all of them, and honestly, you guys should be as well. And remember, folks, we're going to continue to be tracking these treasury companies as they've been giving those altcoin season-like gains that we've all been craving. And that's exactly why I'm proud to partner with Kraken, today's channel sponsor. Thank you, Kraken, for sponsoring this video. With Kraken, you get access to over 11,000 assets, crypto, stocks, ETFs, all in one secure, easy-to-use dashboard. They've never been hacked in history. They've been open since 2011. They're US regulated. You can get everything like Bitcoin, Ethereum, Tesla, Apple, MicroStrategy, and others. Super easy. So if you guys haven't checked out Kraken, make sure you go do that. It's very easy to sign up. They've got 24 hours, 7 days a week support, unlike banks. And I've been using Kraken since like 2013. So I'm really happy that they were happy to be a channel sponsor. Let's get back to the video. And one more thing about Kraken, I must say this, not financial advice. This is for educational purposes only. Okay, now back to this show. The institutional momentum keeps building, and that's showing up in new products and capital inflows across the crypto industry. Trump Media has filed to launch the Truth Social Crypto Blue Chip ETF, allocating directly into Bitcoin, Ethereum, Solana, Crypto.com, and XRP. This new ETF brings Crypto.com on board as a fund's exclusive digital asset custodian, marking another moment where mainstream and crypto finance are blending. Meanwhile, Emirates Airlines is teaming up with Crypto.com to bring crypto payments to their customers, aiming to roll out Crypto.com Pay as an option for flights and services starting next year. This is fantastic. Like I told you guys before, if you've been a fan of the channel, that I had an issue with Emirates for messing up my flight to Dubai with my dog Rupert. I will never use them again if I have to fly with Rupert again, but I will definitely use them if I don't have Rupert and I can pay in crypto. At the same time, guys, Robinhood and Republic are experimenting with a new generation of investment products by launching blockchain-based stock tokens. They're designed to track the performance of private companies, but they're not actual shares. Robinhood's stock token offerings are classified as derivatives, meaning you get price exposure, but you don't actually get the stock. This approach has already sparked public debate and pushback from companies like OpenAI. But if you guys really want to see something cool, check this out. As you may or may not know, I am one of the co-founders of a company called Commonwealth. So as you guys can see over here in the Discord, under this tab, investment opportunities, there are 2 deals right now, which I'm very excited about: Colossal Biosciences and Hadron Energy. These are equity plays. They're not Web3, they're not crypto, but they're fast-moving sectors that are very interesting. One of them just had this news today. Lord of the Rings director backs long shot de-extinction plan starring New Zealand's lost moa. This company, Colossal Biosciences, was also on Joe Rogan recently. They're planning on bringing back the woolly mammoth. They've already brought back the dire wolf, and they can even probably do dinosaurs, right? So like, this is wild. And right now, Commonwealth is preparing to offer a deal where you guys can get into it. So if you aren't part of Commonwealth, make sure you do that. Go join the Discord, check it out. If you guys are looking for some amazing investment opportunities, and I think they're over there. Another one too that we're looking at is called Hadron Energy. As you know, Trump just signed the executive order a couple months ago, basically removing all the red tape from nuclear. So this one's awesome. Hadron Energy is making these like compact nuclear reactors that can be deployed all over the world. They're going to build a gigafactory to produce these things. It's a much better way to do nuclear. As the increase of energy expands for AI and data centers and everything else, this company is going to be there to serve them. Anyway, super cool. So, and what Commonwealth has done from the technology perspective is allow direct exposure of these investments and then additional tokenization. I'll make a video on that soon, probably next week, to talk about how that works. But I thought it was appropriate to mention it today since we're talking about Robinhood and Republic doing tokenized stocks as well. But this is even cooler. Bitcoin Treasury 2.0 is a story leading everything right now. Today, you saw how Metaplanet is rewriting the playbook, how Solana and Ethereum are surging into corporate treasuries, and why the next generation of institutional products is coming online faster than anyone expected. Every week, we go deep to bring you the research and the signals that matter the most, so you have an edge and you can take full advantage. Uncertainty always comes with opportunity. I've been in the trenches in this market since 2012. I've seen every cycle, every bear market, every moment of doubt. Back in those early days, when things got volatile, it honestly felt like Bitcoin could go to zero. There was no Wall Street money. There was no nation states even mentioning crypto, but the people who stuck with it did so because they had real conviction. That's always made the difference. Have you guys read the Bitcoin white paper yet? Do you understand it? Do you understand the significance of the technology? That's what helped me have conviction. If this breakdown helped you guys see the bigger picture, do me a favor, destroy that like button, share it with someone who's ready for the next chapter, and let me know your biggest questions for the next show in the comments below. I read them all. We take them into consideration. And if you want to understand why Wall Street is all in on Bitcoin right now, check out our video from yesterday. I'll link it here so you don't miss it. And remember, guys, stay sharp, stack your Satoshis. I'll catch you guys in the next one. See ya.